In the 2020 financial year, there was the ability to write off up to $150,000 of asset purchases for a small business entity. What that means is that if you were turning over less than $25 million, you could write off up to $150,000 purchase price of an asset. This was from the 2nd of March 2020 right through until the 6th of October 2020, when the limit changed from being $150,000 to an unlimited amount. What we've found though is in the interim, if you're a business turning over less than $10 million, there's a bit of a sting in the tail in that if you have a pool of assets that existed at 30th of June, you don't get the option of whether you write off the pool balance, it immediately gets written off. What this means is that for future years, you'll have no depreciation carrying forward from 30 June 2021 onwards because your entire asset balance has been written off. That might be great for the current year, but in some instances it might actually create a loss position, or it might just muck up a lot of future tax planning, like you get a massive saving this year and then have a really high rate of tax to pay in future years. So when conducting tax planning, we're reviewing these scenarios with all our clients on an individual basis to make sure that you understand what that looks like. And then we can help you with planning for future years' tax as far as what we might do to push some of the tax savings into future years. If you need help with this, we'll run through it with you in your tax planning this year.